Hey guys, what's going on? It's Financial Dan here, chilling in the early morning with my little girl Sienna. Um, so today we're going to talk about investing in 2021 and specifically how important and how awesome dollar cost averaging as a strategy will work for you. Um, Before we go any further, I'm sure as every single person I've walked up to yesterday at work was asking, what did you do to your face? Um, Took a head to my face basically. I'm a soccer player. I came down to where I'm at right now in Tennessee because of soccer from Canada, and finished playing college 2 years ago. And I still like to play competitively, and was jumping up in the air, and so was another guy, and his head just kind of grazed my head, caught me in the face, and that was that. Didn't think it was that bad, but damn it! Actually, the next day it don't look great. Anyway, so drop a like and subscribe. um, anyway, let's get into the video. First off, what is a simple definition of dollar cost averaging? Dollar cost averaging is making the same dollar amount invested into the same investment over a set amount of time. So, Facebook stock, you dollar cost average if you're putting $100 every month into Facebook stock. You mean no matter what, December 15th, then 2021, January 15th, February 15th. That is dollar cost averaging, taking the same dollar amount at a specific interval and putting it into it. Now, being that this is 2021, I'd like to talk about both stocks and cryptocurrency because I'm invested in both. And this is a financial investment channel, and I think both are going to be very important in the coming years. Dollar cost averaging, when the cost is high and you're buying into it, you end up with less coins, crypto, or less stocks. But when the cost is lower, you're buying more coins or more shares. So in a way, you're kind of averaging out depending on which way the market's moving. Which is why in some situations, depending how the market is, it's better to put more of your money in at the same time. That is, buying the dip type strategy. And in other types of the way the market is, it's much better to dollar cost average. In my opinion, the market in 2021, it will be the best to dollar cost average. One of the main reasons behind that is it's good right now to, as soon as you get your money, put it into an asset, into a stock, into a crypto, and not have it just sitting in the bank because of inflation. The way we're printing money right now, we just got another, I didn't get it, but we just got another $1,400 stimulus. And that was, a $1.9 trillion bill. So that's printing a lot of money. Even before this stimulus went out, I think, was it like 20% of the money in circulation was printed in 2020? Just some kind of mind-blowing numbers. I don't know the exact number. If you know what that stat is, drop it in the comments if you can. But it's just going to be much more important to have your money into something like an asset. Now, my strategy for this, as investing right away, there's one part to it. Graham Stephan, I follow him on YouTube. He's one of the biggest financial YouTubers. It's important to have a reserve, a backup. He suggests 3 to 6 months. I personally probably only have about 2 to 3 months of my expenses in a Ally savings account, which used to be a higher interest savings account, but everything is pretty low interest right now for savings accounts goes. But that's just, it's almost a safeguard just to make you not feel so nervous that you have another bank account, you have another source of income, right? And then my main checking account, which my work is associated with, all the money that comes from my direct deposit, which I get paid weekly for, that money, I've got all sorts of automated deposits to my crypto exchanges, to different coins, and to M1 Finance, and to my different stocks. I'll talk a little bit more about M1 Finance later. It is a great platform for dollar cost averaging. and we'll take a look at it on my screen too. One of the other pros about dollar cost averaging is that it is easy. I'm not going to say set it and forget it, but you can set it up and you don't have to monitor it daily and look at charts and look at lots of technical details. Sure, the charts can be helpful to look at because you're looking at a long-term strategy for most of what I do when I consistently invest into a stock. I'm looking at least a year out. I had a Corona growth portfolio that I kind of put together that I was dollar cost averaging into. I started it when the market hadn't started going back up yet, and it was still going down a little bit, but I didn't know where the bottom was. And that's one of the benefits of dollar cost averaging, because you don't have to know where the bottom, the final dip is going to be, because you'll just keep buying as it goes down and getting better and better for sale prices of the stocks. And then when it hits the bottom and starts going back up again, some people are still worried it might be a double top and then drop back down again, but you've bought consistently, and then the value of your investment just goes up a lot. And I'll show you on that M1 Finance portfolio on how that did. Most stock exchanges and crypto exchanges let you set up automated deposits, and I just find it very helpful for averaging into the market and not having to monitor it as closely. I know Fidelity, Webull, M1 Finance, obviously, Robinhood, for stock exchanges, they will definitely allow you to do automated deposits. Crypto exchanges, I'm on Binance US, I have Voyager, I have KuCoin, I have BlockFi, and all of those also allow you to do, automated crypto deposits into specific coins and assets. The nice part about M1 Finance and Robinhood and Webull as well, I believe. I'm not sure about Fidelity. I don't have them or some other more traditional stock exchanges, but I know for sure M1 Finance and Robinhood, they offer fractional shares. So you don't have to buy a full share of Apple or Facebook or Tesla, because that could be expensive, and you couldn't set up a dollar cost average into that, honestly, because who's got that kind of money, unless you're only averaging in every month or 2 months. Now we are just blessed and so lucky to have fractional shares that allow us to do that. I mean, you never were able to do that before. And this fractional shares in a lot of these exchanges, they haven't been introduced until, it wasn't just within the last few years that this started to come up as a thing. And as soon as one exchange started doing it, to be competitive, they all had to. And that's the same thing with the way trading fees go as well. Dollar cost averaging used to be a con to it, or a negative to it, used to be the fee that you pay when you're averaging. Because, when you're averaging, you're splitting up into smaller payments, you'd be paying more in fees. But, Robinhood and M1 Finance, there's zero fees on the trading. You don't pay a percent, you don't pay a 2-3% fee on it at all. You don't pay a $5 fee, $10 fee like it used to be. Some of those exchanges, it used to be really expensive. And that would bring down your return. I'm going to bring up an example on how dollar cost averaging is better than picking when to buy this awesome bet that took place from 2008 to 2018 over a 10-year period. Warren Buffett bet $1 million against a hedge fund that over a 10-year period, the S&P 500 would beat out a professionally hand-picked investment. It is active investing from the hedge fund, in a way, versus passive investing, as in dollar cost averaging. 90% of mutual hedge funds over a 15-year period don't beat the S&P 500. Now I'll let that kind of sink in a way. And what happened in the end was, near the beginning of this 10-year period, the hedge fund was beating out Warren Buffett. But then as the market kind of went down and they made different choices and tried to pick what to do on the dips, and these are professional stock investors, S&P 500, consistently investing. Market went up, and in the end, Warren Buffett won by a good amount. And on top of the 1 million, which to him, peanuts. But anyway, I thought you can look it up, the Warren Buffett bet against hedge fund managers, if you want to read more about it. But it's a great story. Now, cryptocurrency is very volatile. The prices spike up and down and up and down. Bitcoin goes way up and then comes way down. And dollar cost averaging just makes it a little safer, because you may buy into something that you think is a dip and it could keep crashing, or it could come up and then come back down, and it's just all over the place. And just to take your emotions out of it, what I do with a lot of the crypto exchanges is I'm monitoring them and buying them dollar cost averaging into certain coins twice a week, bi-weekly. And I'm doing it on different days on different platforms. So I buy 4 different coins right now on Friday with Binance US, and 4 different coins on Voyager on Tuesday. The same coins on Friday and the same coins on Tuesday, but 2 different exchanges. It just lets me set it up to do it bi-weekly easier. And this lets me take advantage of the swing in prices on a daily basis with crypto. I mean, you can trade crypto at night. It never stops. The bell never rings. It's one of the beauties of it, because you can always look at it, but that really helps take your emotions out of it in a certain way. One of my favorite YouTubers who does crypto is Journey Crypto, JRNY Crypto. He's a great guy to follow if you want to get into cryptocurrency. A lot of useful information, daily updates. I totally support what he's doing. It's awesome, and his channel's grown like crazy. But he's got a lot of knowledge on the subject that he's sharing with everybody. And now his strategy is dollar cost averaging as well. But he does try to specifically pinpoint dips. And sometimes he gets them, and sometimes he doesn't get them as close. But the crypto market right now it's just booming. So 4 mistakes you can make with dollar cost averaging would include not starting early enough, not investing consistently, not forgetting to rebalance, and abandoning the strategy at the worst time. So not starting early enough. Get started dollar cost averaging into some. Take some of your paycheck out and start averaging into a portfolio. Whether it be some stocks, whether it be some crypto, as long as you're getting it out of sitting cash, that's just going to inflate. And we don't know how bad the inflation is going to be, but the numbers they're publishing, I don't know how close they are to what the real numbers could be. Not trying to get into too much conspiracy with that right now. Not investing consistently. The whole strategy is based around investing consistently. If you see the market start to really tank, don't stop, don't pull out, don't keep going, let it go. It's going to be all right. Don't forget to rebalance. So if you have a strategy portfolio where you've got certain percentages set up on certain investments, and the way, say you've got bonds, stocks, and crypto, you want to be 33, 33, 33. If one starts to boom like crazy and ends up the value of it skewing up to like 40%, you should, rebalance it back to that 33% at some point, so that you're still investing in what you want to do your portfolio at. Finally, abandoning strategy at the worst time. Like I said, don't pull out if it's going down. All right, I tried to share all the thoughts off the top of my head on dollar cost averaging. Let's swing in and take a quick look at my M1 Finance, and just, I'll show you some of the percent returns that I've made over the past year and how it's set up on M1 Finance. And there's going to be a link in the description for M1 Finance. If you sign up with that link, it'll help me out, it'll help the channel out, but most importantly, it'll help you out if you get set up on it to start automatically investing. And I will do another video on M1 Finance and get more into that. And comment if you want something like that. Please like, and like I said, please follow me, subscribe. I'm going to try and help you guys get a better hold of your finances and make more money with your money. Let's take a look at M1 Finance. So M1 Finance works by using pies, which I think is a great visual for what percent you are in each holding or each stock. Also, I mean, who doesn't love pie? I love apple pie. So let's take a look here. This is the Corona Growth pie that I had. Now, the best thing about these pies is that you can put pies inside the pies. I know, mind blown. So last year, this portfolio, and actually I don't even think it is a year for this portfolio, March 16th to August, from August 6th to March 16th, we got about an 80% average return in this pie, which is made up of a 2020 growth V1, pharmaceuticals, cars, big boys, 5G, travel, and miscellaneous. So those are the holdings down there, and there's the weight on their percent on each target. Now I can drill into these. Now, for example, one of the best ones, cars. The major holding in this, 90% of this holding was Tesla. If we look at the 1-year return, it was 628% average. If we look at, I had General Motors in there, and I had Ferrari. Who don't love Ferrari, you know? Now let's see, what's another one? 5G. So on this one, I had specific holdings: Qualcomm, Nokia, Marveltech, Keysight Tech, Infinera Corp, Sienna Corp, Broadcom, and you can see the different percent weights I have here. Now we look at the 1-year return on that. I don't know why you have to bounce this chart back and forth. 97.4% return. Let's see now. Let's go back. And then let's see, this 2020 growth V1. These are stocks that I picked out in 2020 that I thought were going to do well with that dip and everything. Here's the different slices: Wynn Resorts, Slack, Upwork, Boeing, Dropbox, Nordstrom, Cheesecake Factory, Etsy, BigCommerce, CrowdStrike Holdings, Capri Holdings. Average return of 89%. Some of these stocks you may recognize if you follow him too, but Jeremy with Financial Education, he's awesome. I follow him for a lot of stock information, but it's always very important that you do your own research into the stocks as well, which is what he, harps on to his followers as well, his subscribers, is you really got to, look into these companies and know what you're getting into if your money's going into it. Because as a disclaimer goes, I'm not a financial advisor. Videos for educational purposes and let you get set up to do your own research. Here's miscellaneous. I had a whole bunch of stocks in this, 16 slices of different stocks. I'm not going to read them all out. Looks like the largest holdings I had was DraftKings. And I know that one did well. Let's see. Over the past year, plus 524%. Not bad. So like I said, M1 Finance is a great tool for as a robo advisor, which is what they call it, being able to set up pies and automated investments, as well as crypto exchanges such as, I like Voyager a lot. Binance US, KuCoin can get you some smaller low cap coins. Now I do have some other strategies for cryptocurrency that I'll make videos about because they're a bit of a different situation. It's good to dollar cost average, don't get me wrong, into some of the larger, more higher market cap coins that there's more people behind and that they're safer and less risky to crash. But don't get me wrong, the returns you can get on a low market cap crypto that's listed on other exchanges and takes off is crazy. And I'm going to make another video sharing my crypto portfolio and going over, my strategy on crypto investing here shortly. So stay tuned and subscribe, and I'll get that video out for you here soon. All right, finally, if you got value out of this, please subscribe and like. This is a small channel, just got started. I'd love to see some support behind it to keep me going and getting up early in the morning. I got up at 4 in the morning today, And now I gotta go get ready and go to work, and then I'm gonna edit this video after work and get it out here for you guys. So a lot of effort goes into these. Really appreciate subscribers and likes and comments, and let me know what you want. Leave some feedback in the comments on what I could do better or what videos you want to see. And since I don't have many comments or anything at all on the channel right now, I'll do my best to address them. Sienna, say bye. Sienna, say bye. Say bye.